We are here to talk about a big issue that we're seeing in the tax space, and that is just sort of chronic noncompliance, non-filing. Folks are trying to figure out what they need to do to come clean in those situations and to fix their problems when there has been 1, 2, 3, 10 years of noncompliance. My name is Peter Haukebo. I'm one of the tax partners here at Frost Law. I am joined by one of our other tax partners, Rebecca Sheppard. We are here to talk about a big issue that we're seeing in the tax space, and that is just sort of chronic noncompliance, non-filing. Folks are trying to figure out what they need to do to come clean in those situations and to fix their problems when there has been 1, 2, 3, 10 years of noncompliance in a situation where the government is changing a little bit in how it is staffing itself or has, the resources to look into things. One of the issues that they may be looking closely at is who is non-filing. So I guess, Rebecca, when someone has, again, 1, 2, 3, 10 years of noncompliance, what are the types of things that they should be thinking about?
A lot of clients that come in our door don't intend to not file their tax returns. What happens is there's one event, something that happens in their life, and it starts a path of noncompliance. So somebody's very sick, there was an issue with the business, something happened to them, and then all of a sudden there's a path of noncompliance, whether it's individual income tax, sales tax, payroll tax, whichever noncompliance it is. People are constantly trying to catch up, and they think, one more week, one more month, one more year, and I'll be able to get myself back on track. And then another tax season closes and they're not able to be in compliance again. And what we want to encourage you to is this is the time to talk to a tax professional. Don't worry about 1 year, 3 year, 5 year, 10 years of noncompliance. It's not going to get fixed by worrying about it. It's going to be fixed by talking to somebody and kind of working through these problems and understanding that you are not alone. This happens all the time. And it's something that, a tax professional can help you through this. The first thing would be, as I said, to talk to somebody, but pull your wage and income transcripts for the last 6 years, get your documentation in order to talk to a tax professional, kind of understand what events led up to the noncompliance, so that way you can change those events that happened in your life that you kind of walked down that path. And then if there's a balance due, people can work through that and get you into an installment agreement, an offer in compromise. Sometimes bankruptcy is an option. Whichever collection alternative works for you, that can be dealt with at a later date. The first thing is to kind of figure out what's owed, whether it's income tax, sales tax, like I said, admissions and amusement tax. There's all kinds of reasons for noncompliance for, individuals and for businesses.
And so that's like, I guess, a really clean scenario where somebody finally says, okay, I realize that, I haven't filed, I probably owe some tax, or I know I'm going to owe some tax. There's other scenarios that happen where, for whatever reason, a taxpayer hasn't filed. Well, the commissioner can file a return on behalf of that taxpayer. There's statutory authority for that to happen, and that sets into motion a whole bunch of stuff. The commissioner doesn't always get that computation correct, right? And you may need to dispute that with a tax court, in some circumstances with the U.S. District Court. But that is a consequence of the IRS of filing noncompliance, where the commissioner will file on your behalf, make an assessment. There may be opportunities to unwind that assessment. You've got to make sure that certain notices were sent to the taxpayer's last known address. What is the last known address? These types of issues are where tax controversy attorneys can really help. The other big thing is, to the extent you've been having amounts withheld on your behalf or made estimated tax payments, there are refund statute expiration dates that continue to run in the background. And so making sure that you're on top of those dates, even during noncompliance, you may be losing the ability to claim that refund and lose those resources that you've worked so hard for. And of course, in a worst case scenario, filing noncompliance is potentially a crime. It may be a misdemeanor. It certainly could rise to the level of a felony. You could have issues with evasion of assessment in certain circumstances if there are affirmative acts. So again, these are other situations where it makes sense to get tax controversy attorneys involved in periods of noncompliance.
And one way to to come clean and voluntarily comply and to avoid criminal penalties would be a voluntary disclosure. That is something that you definitely want to get help to decide whether or not you're eligible for voluntary disclosure. There's rules for state and federal voluntary disclosure programs. And then in addition, to see what that look back period is. So a voluntary disclosure program kind of sets a date as far as how far back you have to go. So if you haven't filed taxes for 30 years, the voluntary disclosure program might, if you only go back 5 years, makes it a lot easier for you to voluntarily comply if you know that that statute's going to close.
So I think the big takeaway is, we all acknowledge that there's noncompliance going on. You need to file tax returns. That doesn't always happen, but there are professionals out there, tax controversy attorneys, accountants, CPAs, that can help you navigate those challenges. And it's maybe not always an attorney. Sometimes it's a team. And we can work together with, other professionals to get you where you need to be.
Yeah, absolutely. I think the big takeaway is to know that this happens and it's not going to get better by waiting till the next tax season or waiting to the next month, and getting ahead of it and just kind of figuring out where you're at as far as compliance and as far as like a liability is the most important thing.
The IRS does have a policy that, it's 6 years of, back taxes that generally bring you into compliance. So if you hadn't filed in 10 years, typically you'll only be made to file 6. Certainly we see new clients come in and they say, hey, I went back and I filed all my taxes for 10, 15 years, whatever it is. And they self-assess additional balances, and there's not much you can do at that point. Now, there's an exception to the rule, and with managerial approval, IRS can ask for further back tax returns, and sometimes that happens. But working with someone to make sure and to do what you can to limit that exposure is important at the outset of coming back into compliance.